Selling a Business Guide. Chapter 1. Selling a Business. Selling a Business 1. Selling your company may save you years of work if the buyer delivers you the profits you expect, but selling a business rarely runs like clockwork. If the guy turns out to be a bum who's there to get what money he can up front by selling the business's assets then skipping, you're screwed. That's why you have to do due diligence before you turn your business over to anyone. The truth about all fraud, including business fraud, is that the criminal courts don't have time for it. They got rapists and murderers to deal with. They don't waste time on fraud. They often drop the charges. It's your responsibility to not get sucked in by a fraudster. A business may not be an easy thing to sell, especially for the money you want, because there aren't many buyers out there. Most people either want to start their own thing from scratch or don't have the money to buy a business, so don't expect a seller's market, although you never know for sure. There are no hard and fast rules. Beyond selling a business conventionally to another person, there are management buyouts, MBOs, where the management of the company buys it, a leveraged buyout, LBO, where the employees buy the company, or an employee stock ownership plan, ESOP, where employees get a certain amount of stock as part of their wages or retirement plan, which could give them enough power as a group to control the company. An operating business is not necessarily a business ready for sale. It's the same as selling as a house. Clean it up, make it look good. Have everything ready in tip-top shape, all your paperwork, personnel, financial records, asset inventory, employment contracts, insurance, real estate papers, etc. Just like you want to make a house look as nice, neutral, and white as possible, do the same with your business. Clean it up, get rid of old, obsolete inventory, and maybe give it a paint job. Advertise in local, big city and national newspapers, on the internet, money-making and business opportunity magazines, and the few publications geared to selling a business. Go through the following checklist in making up your business sales plan. Decide whether you will try to sell it alone or with a professional broker, commercial real estate brokers, investment bankers, merger and acquisition firms. In any event, talk to your accountant and lawyer about selling the business. Decide on exactly what you will sell as the business. Put it all on a list. Use one or two methods to determine a monetary value of your business, which will be the benchmark of asking price. When you get an interested party, do a credit check to determine if he or she has the money for it and a good reputation. Get your tax records ready to show the potential buyer so he can see on paper what it generates in income and what you pay in taxes. It's your call whether you want to tell him about your off-the-books business practices. Prepare a written report about the future potential of your business based on current operation and give it to potential buyers. Highlight all its good points, but don't go too hard on the hype. Approach competitors about buying your business. Depending on the business, you might get immediate takers, you might not. The typical buyer is somebody in a career with some money saved up, approaching retirement, looking for a change. Some retirees buy small businesses. Look for the real estate agents in your area that specialize in businesses and get listed with them. Attend trade shows, seminars, business meetings, etc. in your field and pass out business cards saying you have a business for sale. Sometimes competitors and others in related fields are looking for a way to expand. Send letters to your competitors and related businesses telling them you're selling your business and inviting them in to have a look. Advertise in the trade magazines for your business. Possibly get some nice-looking company pamphlets made up. Tell the good things that showcase the business that buyers can look at when they check it out. Make up a detailed company report, just like a business plan, that details all the facts and statistics about your business. State why you want to sell your business. Have this ready to offer to prospective buyers. In essence, make it easy for buyers to buy. Be accommodating. Sell them what they want. Do whatever it takes to make the business look good. Come up with a reasonable asking price. Market the business. Do the negotiations to make the sale after you get a taker. Selling a business is not like selling a house. People need to live somewhere. They have to buy houses, but a business is just another investment among many. It's not as urgent. People don't have to buy businesses. They could start their own. Don't expect many lookers and don't expect a serious bite for a while. Your job is to show the potential buyer that your business is so good that he will make good money with it. Price it so that it's affordable. Be realistic about what someone will pay for it. Some people worry about keeping the decision to sell secret, and once a sale is made, keeping the terms secret. I say this is the least of your problems. In this day and age, most people don't give a damn. Just go ahead with what you're doing. If the employees get depressed because they think you're selling and could lose their jobs, tell them if you sell, the new owner will most likely keep them on. The right time to sell a business is anytime. It may take a year or two to sell, so get on it right away. Tell the buyer the truth. Anybody's who reached a level in life where they're seriously interested in buying a business is presumably no fool. They know what's going on, so tell them about the hard work, tedium, and lean times involved, but tell them the other side too, that it's a good, solid, steady business for anyone willing to work at it. When a buyer asks why you're selling, tell him the truth, that you worked hard, paid your dues, and now it's time to move on to something else. A lot of owners grow attached to their businesses like it's their child and think it's a goldmine, but the buyer is just thinking how cheap he can get it for and how much money can he make at it, so be objective. It's only worth what someone will pay for it, not the sentimental value you put on it. Don't be emotional about it. The memories are in your mind. Sell to get the money to get rid of it so you can have peace. Forget about it as your life's work and legacy. That's past tense. Give the next guy a chance to do it his way. There are 3 steps to selling a business. Signing a letter of intent. Performing due diligence. Signing the sales contract. You will have to agree on terms. There are many options, it's between you and the buyer, and then there are taxes to deal with. Get a good accountant who knows taxes so he can help you out with tax laws regarding the sale of a business. Tax Reform Act, 1986. You will have to get an attorney to handle the paperwork and possibly hire a broker or consultant to handle all the details of your sale, from finding a buyer to getting the money. His payment will either be a flat fee or percentage commission of the sale. These consultants advertise in the yellow pages under business consultants or as brokers in the business section of the newspaper and through the grapevine. They try to get around and get the word out to business owners that they specialize in selling businesses. Some are good, some shady. Don't pay money unless you sell, that's the way to deal with them. If your company is big, you might need an investment banker to take care of details to arrange financing for the sale. You might want to hire a business appraiser, business valuation expert, to do an audit of your business and come up with an objective report on its worth. It comes down to a negotiation process. There are many possible combinations of terms and methods of payments, and possibly some subsidiary considerations that could be quite complex. There are even tax considerations. In short, every business selling situation is unique, but there are 3 basic categories. Total cash up front. Extended payouts. Earnouts. For cash up front, the buyer usually pays the buyer off in some combination of cash and/or stock within a year of signing the contract. With this option, you can often negotiate the lowest price because you're giving the seller the easiest, smoothest way out possible. In an extended payout, the seller helps the buyer by giving him some manner of long-term credit which allows the buyer to pay out of the earnings of the business. Because the seller is going out on a limb, the overall price will be higher. There's a clause in there that if you default on monthly payments for 3 months or so, he gets his business back and you get nothing, foreclosure. With an earnout, the buyer wants the sellers to be in there and in charge for a while until he or she transitions into it. The buyer will generally put down up to about 50% of the cost, with the understanding that the owner will stay there managing or overseeing the business until enough profits are earned to pay him what he is owed and the new guy learns the ropes. These types of agreements could get quite complicated. As you can see, with a selling deal, you could go from owner to employee and work for the new owner. Some foreign investors are interested in buying American companies. Either advertise in foreign newspapers, contact foreign embassies for leads, or go to international trade shows. Find business consultants that specialize in international business. Selling a business to brokers or business intermediaries arrange buyer and seller meetings after there is a non-binding reasonable offer. You try to hash out problems each side has. The seller should do a credit and criminal record check on the buyer. The buyer has to do due diligence to determine what is really going on. He has to check to see if the records are real or fake. Visit the business. Talk to some employees. There will probably be a round of negotiations until both sides accept it. A deposit may or may not be required, depending on the size of the transaction and the whims of the seller. When the buyer completes due diligence, an optional escrow account might be created to protect both sides as money is transferred and assets are given over. The seller should train the buyer for 2 to 4 weeks. After a month, he can start charging consulting fees. Think of selling your company like selling your house or selling your widgets. The procedure is similar. You have to set a reasonable price high enough to make a profit or at least get out at minimal loss, advertise in the right mediums to get people to check it out, and from that bunch, find one person or group of people willing to buy. Without getting too complicated, as I've seen in textbooks on selling companies, there are 2 major factors to consider in setting a price for your business. 1. The concrete value of your building, equipment, vehicles, products, inventory, etc. 2. The regular cash flow coming in from sales, which translates into the future earning potential of the company. From this, you would have to subtract whatever debts the buyer would assume, if any. If the company is big enough, you could prepare a sales brochure, which is basically a corporate profile and includes your promotional literature and catalogs regarding the sale of your products. You could even set up a website, as some people do, selling their houses, then in advertisements, refer people to go visit it. Some sellers are reluctant to post an asking price. They want people to make offers. If you're going this route, state it explicitly, make an offer. Sometimes this works, sometimes it doesn't. There have been business owners who said make an offer and have been offered more than what they would have asked for, but quite often, if you don't list a price which, by the buying market, is the high price from which to negotiate down from, many potential buyers won't even bother making an offer, because people have this psychology about buying things, which is that if the price tag is not there, it means the price is high, and they pass on it rather than waste their time and possible embarrassment asking about it, because if they ask and pass, they think it makes them look like they can't afford it, and that's a big sin in a capitalist society. Depending on the size of the company, you will have 3 types of interested buyers. 1. Individuals looking for a business to run. 2. Investors or financial buyers looking to make money somehow by buying the business to either revamp and sell or resell straight out. 3. Corporations or other companies looking to expand. Your best bet of these 3 options is the company looking to expand. They have the most money to spend and will probably offer you the best price, so target your advertising at this market. Trade magazines, journals, newsletters, and websites related to your field. Don't be above going to competitors, suppliers, and even some customers stating the fact that you are looking to sell. Find company lists in the corporate/industry websites section. Send a letter to each of your competitors and suppliers saying you are interested in selling and putting the word out. Ways to sell a losing businesses are: to large public companies that need assets for tax write-offs. Someone who thinks he can turn it around. Foreigner looking to get into the country. Employees in the business banding together. If you're trying to sell your business, don't tell your employees if you can help it, because it will sap morale. Documents needed to sell a business are: notes or mortgages owed, contracts with employees, customers, or suppliers, present lease, corporate books or partnership agreement, any patents, trademarks or copyrights. Overprice your business so they can knock it down in price and think they're getting a deal. If you can't sell your business, either continue as is, sell it your employees, liquidate, give it a cosmetic facelift or close down. One guy couldn't sell the business in the building it was in, so he sold all the equipment and product and the buyer set it up in another town 50 miles away. Try to sell your business when the economy is good. Try to buy a business when the economy is bad. Comply with the government rules about selling a business. You will have to pay some taxes. After you sell your business, there will probably be a clause in the contract where you are required to help the new owner transition into his new business. An earn-out is a contract where the buyer agrees to pay the seller based on how well the business performs. These usually turn out bad for the seller. Your best bet would be to retain control of the business, give the new guy a chance to manage it but retain the power to override his decisions if you don't agree with them or kick him out if he doesn't run it well. There are legal things you must disclose to the buyer about the business. Find a good business lawyer to help you through the process. There are several different ways to sell a business. Sell it all via private sale. Incorporated with stocks. Could sell a portion of it or all of it. You will have to pay capital gains taxes on the proceeds from the sale. The typical financing structure for the sale of a small business is 40 to 60% down payment with the buyer making a payment agreement for the rest directly with the seller, using the business as collateral. There is some interest on the money owed but it's not as high as a regular bank loan. If the buyer defaults, he loses the business he bought. If you have trade secrets, only show your business to people with serious offers and even then have your lawyer draft up a confidentiality agreement for them to sign. Go to number 332.6 to 333 of the library, look for a book about selling a house and follow the same rules they list for selling your business, like clean it up, cosmetize it, depersonalize it to make it look neutral nice, write down a list of all its details, etc. I discuss this in my real estate book as well. Books about selling a business are at number 658.16 and HD 1393 to HD 3930 at the library. Taxes on the sale of a business. Income tax law presumes that gain or loss on the sale or exchange of real estate property. This gain or loss must be reported on a tax return unless there is a specific exception set forth in income tax regulations. The seller's taxable gain is defined as the amount realized over the adjusted tax basis of the assets sold equals taxable gain. If the adjusted tax basis exceeds the amount realized, the seller instead has a tax loss. Refer to IRS Code Section 12. Sell a business websites. If you plan to buy a business, consider getting a professional business valuator to do a report for you. Look under Business Valuators in your local yellow pages. BSCOMPS is an annual book that profiles businesses for sale in different regions of the U.S. IBBA.org, International Business Brokers Association. 1st-business-for-sale.com. abramsvaluation.com, click on books then look for free articles. agio-capital.com. allbusiness.com. amerigopartners.com/selling_your_company.html. anlinger.com, buys companies. Acquirio.com. arizonabusinessbrokerage.com. aciamandasvcs.com, Asia's mergers and acquisitions. awesome.biz/buy, websites for sale. barclaysbusinessbrokers.com.au. BuriaBusinessSales.com. bbn-net.com. bbpink.com, Business Brokerage Press. belgotech.com/buying-business. birdiebuzzard.com. betaboss.com/franchise_directory.cfm. bizbrokerdirectory.com. bizbuyer.com. bizbuysell.com. bizexchange.com. bizforsale.com. bizhighway.com. bizquest.com. bizquest.com, buying and selling a business. bizquest.com/sell. bizazale.com. bizazale.com. biztransfer.com. boldventuresgroup.com. btobmag.com. business.com. business.gov/phases/launching/by_business/index.html businessbizmove.com/buying/m5a.htm, how to buy or sell a business, an overview. businessbookpress.com/articles businessbroker.bizmp.com/businessbroker.html businessbroker.net businessbrokers.com businessbuyandSell.com businessdistrict.com businessesforsale.com businessforeclosure.com businessforsale.net 800-783-3344 businesslink.gov.uk businesslink.gov.uk/bdotg/action/layer ? Topic ID = 1073861225, how to buy a business. businessmart.com businessnation.com businessnation.com/businesses_for_sale businessbroker.bizmp.com/businessbroker.html businessobjects.com buy reports on businesses. businessopport411.com businessnation.com/businesses_for_sale businessranks.com businessrentsale.com business-sale.com businesssaledirectory.com businesstown.com/selling/index.asp businessvaluators.com. If you plan to buy a business, they will do a report on it for you. Buyabusinessguide.com buyasmalobeyes.com buybusinesscenter.com buyingsmallbusinesses.com buyselobeyes.com buy-sell-business.ffind.eu.com buyselcompany.com bvs-inc.com cashsalequickclose.com/i_buy_business.shtml cbsc.org/english/search/display.cfm, Canadian commerce-database.com continentalbusinessinc.com/buy.htm, Florida corporations4sale.com diomo.com, the Business for Sale Buyer Resource Center downerink.com dynamicbusinessbrokers.com ebuybusiness.com ebuybusiness.com empirabusinessbrokers.com, help people sell their businesses. entrepreneur.com/article/0,4621,323195000.html, how to buy a business. expertbusinessbuyer.com fibre2fashion.com/trade avenues/trade_opar.asp, textile. findabusinessbroker.com franchise.org franchisegator.com/buy_franchise_business.html franchiseworks.com gemagroup.com globalbx.com, business for sale listing exchange. goodbusinessgreatprice.com gotachance.com, find jobs, business for sale. hotbusinesses.org ibba.org, International Business Brokers Association. insolvencyhelpline.co.uk/business_advice/buy_sell_business/sub_index.htm instbuletinsap.org, business appraisers. intel.com/businesscomputing/small/buyers/index.htm irs.gov/businesses/small/article/0, ID = 98696,00.html, closing a business, selling a business, tax info. list-your-business.com lpbuyer.com, buys limited partnerships. mergernetwork.com mergernetwork.com/businesses-for-sale-acquiro.com mergerplace.com mergerplace.com mergerplace.com/mp/visitors/buyers/search mergers-acquisions.com/books.html microsoft.com/small-business/buy/software/detail.msbx, how to buy small business software. mn-resorts.com, listings of resorts, outfitters, and campgrounds for sale in Minnesota. moneysoft.com, buying a business software. motelsellers.com, nationlist.com, salebusiness.com, sale-busines.com, schoolofbusinessbrokerage.com, sellmybusiness.biz, sellyourcompany.com.